Welcome students, welcome to this particular class. Hello students, just confirm. All of you are there. Just allow me a minute students, we can just start the session today. Good morning students. So Priyanka, Siddharth, Santosh, Nishant, Ferry, updates of CA. Good morning. Sudarshan, Hemant. All the audio video students clear? Prasad, good morning. Arun, good morning. Just confirm to me students, audio and video. All perfect, we can start the session then. Nitesh, good morning. Hemant, perfect. Anish, Arun, Siddharth, Ferry, Nishant, Srihari, Harish, Nandu. So students, let's start with the first class. First of all, apologies for the yesterday's student session. Actually, I am right now coming live from Mumbai because of a huge incessant rain for the last 2 days. In fact, today also the rain is very severe. I could not start my yesterday's class, and now we are there. I'll compensate for the first day session, whatever I have missed. Definitely we have got days, so I'll take one extra class wherever required, and I'll try to ensure that your revision of income tax is done in the most comprehensive manner. Fine students. So in this context, first of all students, this revisionary chart, I hope that all of you have got hold with this revisionary chart. Students, Priyadarshini, just confirm students, all of you have got this revisionary chart. I have prepared the most comprehensive revisionary chart on income tax. Students, all of you have got hold with this revisionary chart. In 28 charts, you will be covering the entire syllabus. 28 chart on income tax, you will be covering the entire syllabus. Have you gone through this, students? In 28 charts. Ensure students to share with all your friends, all your groups and all, because this would be a game changer. You can see for yourself each chart what are the contents which are there. You can keep on revising while you are doing other subjects also. You can keep on revising this important areas, and this will help you to get a firm grip on the income tax part while you are also studying the other subjects. So in all 28 charts are there. In all, if at all some students are still stuck so far as the charts are concerned, so students, this number is their WhatsApp number, the first number of WhatsApp which has been given to you. You can just connect there and they will assist you. They will provide the PDF. The first number, you can do a WhatsApp, and there the revisionary charts would be given to you. Okay, so please do ensure to get hold with this one. Let's then begin with students now without any waste of time. Let's start. Students, any particular area while you have revised or read the income tax, any particular area of your concern, if you can just let me know at the very outset. Although we are going to deal each and everything in this chart, but still, while you are preparing for income tax, any particular area which actually has bothered you, say students. You can just type quickly any particular area, students, that you find that was a bit troublesome. PGBP was very tough. Capital gains, PGBP. Capital gains, salary. Okay. PGBP. So primarily the overwhelming response is PGBP and capital gains. Obviously these two are important topics, but definitely at IPCC level, students, salary and other topics are equally very important. Fair enough. I got the whole of your concern. TDS. TDS is okay. As such, we will do this, but I can now come to know that your main focus is on PGBP. Students, PGBP actually also takes you through to the total income competition questions. So what we will do would be that yes. So what we will do, students, would be we will have all the revisionary from this one. I have got some important problems also covered in this chart. If you have gone through that in this chart, important problem. So this is the revisionary problem. This is the revisionary problem. All the important problems, students, you will also find I've covered. Like for example, if you come in chart number 4, I have also attached certain questions. If you see, I have also attached certain questions in this particular revisionary problem. So this way it really helps to sort out with these particular questions as well. Plus, I may also take module questions. So students, what we will do, like I will always say that okay, tomorrow's session we will do some module questions. So what you can do is that you can keep your module ready for the next session. Obviously I'll give a prior intimation so that some critical module questions, not all of them, obviously it's a revisionary part, but some critical module question for the topic like PGBP or capital gains, the topic that you are referring to me, I will ensure to solve certain module questions as well, so that the fear would be gone. Anand Kumar, where is the material? Students, I am repeating it again. This material we have already uploaded in our Telegram channel. In our Telegram channel, the material is already uploaded. One is in my Telegram channel, for which the reference is given, or second is our RPL Telegram channel, and third, if outrightly you want to take it in the WhatsApp number is given to you. Fine, my number, students, is the last one, but you can WhatsApp me only after the lecture gets over. After that, I can just share with you this particular material. Yes, RPL you can download from the Telegram channel itself. It is already there. RPL channel, my channel, everywhere I have given this thing. So please ensure that material is there with all of you. Now students, this basic concept, let's start with this now. Students, the basic concept, this particular chart, please write here in this particular chart, the first chart for your examination is relevant or important for the purpose of MCQ. So chart number 1, MCQ. If they will ask any question based on chart number 1, that will be based on MCQ. So this is basic fundamental concept. So therefore we will also keep on marking what are the particular charts which would be relevant for MCQ. So chart number 1. Basic concept, students, like we all know, first of all, direct tax and indirect tax. So distinction I have given it to all of you. The distinction between direct and indirect tax. So the fundamental difference between direct and indirect tax, students, is that in the case of the direct tax, the person on whom the tax is charged or on whom the levy is created, it is the same person through whom the collection is made. Like it is my income, so the charge of income tax is on my total income. So I am the person on whom the levy is created, and from me only the recovery is made by the government. So same person on whom the levy is created, on that person the recovery has been made. This is the direct tax. Whereas indirect tax, students, you are the consumer, so the ultimate levy or the charge of indirect tax is on the consumer, but the recovery of the tax is not from the consumer, but it is from the supplier, and hence it is indirect tax. That is a fundamental distinction. Keep in mind, these are all MCQ pay basis question. Entry number 82, students, please remember this income tax. The question therefore is, who levies income tax? Central government, state government? It is the central government. From where the central government gets the power to levy the income tax? So students, Constitution of India has given state government, central government, and both the government the legislative power on certain matters, meaning that on these matters you can make a law. So income tax, the matter relating to income tax, students, the matter relating to income tax is in the union list. That is, the central government has the power to make the law relating to the income tax, and what, and that is given in entry number 82. So again I am telling you, this is relevant for your MCQ purpose. Please remember this one, entry number 82 of the union list. As per this, the central government has the power to make the law on income tax. So do we have a law of income tax? Yes, we have the law of income tax, and that law, students, is the Income Tax Act 1961. Now students, one important point before we proceed. Students, in the examination, whether it is income tax, whether it is income tax, GST, company law, students, the word act always would be with the capital letter A. The word act will always be with capital letter A. Never ever use this thing, act. You do this act this way, your marks will be deducted. This word act, students, whether it comes at the start of the word or in between or as the last word, the word act always will start with the capital letter A. Did you all got this one? Don't make this mistake, students. It will backfire. It will backfire, students. So just be very, very careful in this about the same. Taking it forward, students, the discussion. Significant component of the income tax law. Students, what they will have, this MCQ question. Students, MCQ question. This part is an important MCQ question. Annual Finance Act. Students, what happens? As I told you just now, the law that you are reading is the Income Tax Act 1961. But 1961, and we are 2020. So are you reading the law of the Income Tax Act 1961? And the answer is no. What you are learning right now, students, what you are learning is the Income Tax Act 1961 as amended till date. As amended till date. And how this amendment is to be made? How this amendment is to be made? Through the Annual Finance Act. Through the Annual Finance Act. Every year after year, there is a Finance Act. What is the role of the Finance Act? What is the role of the Finance Act? To make the legislative changes. To make what? The legislative changes. Means the amendments in both the scheme, of direct tax as well as indirect tax. So to make the legislative changes in the scheme of direct tax and indirect tax, that the Annual Finance Act keeps on amending every year the direct as well as the indirect tax law. So again, this is an important MCQ question. So just be clear about, I'm just making this particular concept a bit clear so that if there are certain MCQ questions, you should know. What is the role of the circular? Circular role is to clarify. Students, what happens, certain things, like for example, because of COVID and all, you would have known that a lot of due dates and all, due dates have been increased. The due dates, many due dates have been pushed further. So who has that particular power to push all these due dates? It is the CBDT, Central Board of Direct Taxes. Now the CBDT, students, what they do is just that they keep on providing how to implement the law. So in the process of implementation of the income tax law, that the Central Board of Direct Taxes, they keep on issuing the circulars. And that is the reason why circulars, notifications, that is the reason why, students, you will find that due dates are getting pushed. They clarify a lot of meanings which are there in terms of some terms which are used in the income tax law. So that is precisely what they do. And the last one, students, is the case law. The last one, students, is the case law. So case law is to, if there is, as an assessee, I claim a deduction of a particular expenditure in computing my income, but the assessing officer, the income tax department, what they do, they disallow that expenditure. So as an assessee, I am claiming the deduction. the income tax department, they are disallowing my deduction. By disallowing the deduction, they have increased my income. By disallowing the deduction, they have increased my income. And accordingly, students, now there is the dispute between the assessee who wants to claim a deduction versus the department who, by disallowing the expenditure, has increased your income and thereby increased your tax liability. So this dispute, who will settle? Whose position is correct? Whether the assessee's position of claim of the deduction is correct or the department's position of disallowing the expenditure is correct. Whose position is correct? Who will decide that? That is decided by the judiciary. The judiciary. So judiciary, primarily, the role of the judiciary, students, is to interpret the law. Is to do what? Is to do the interpretation of the law. So the role of the judiciary, students, is to interpret the law. So that is what they do. So in this regard, the interpretation of the law is what primarily is done by the judiciary. We all say, students, there are three pillars of democracy. All of you would have heard of this. Three pillars of democracy. The parliament makes the law. Parliament makes the law. Government implements the law. Government implements the law. And the judiciary interprets the law. Judiciary interprets the law. So these are the three pillars of democracy, students. You should always keep in mind this particular part. Now, circular. One student, Harish, has asked difference between circular and notification. So circular is primarily notification. When it comes, students, notification is something which forms part of the law. So when they actually they make a notification, many notification came when the parliament is not in session, students. Through a notification, they try to introduce certain amendments through notifications. When the parliament generally is not in the session, through those notifications, the amendments are introduced. Whereas circular is what? Circular, students, is a administrative instruction, like the boss giving instruction to their subordinate. Circular is what? An administrative instruction given by the boss to its subordinate. So therefore the subordinate, meaning the lower authority, they will act on the basis of whatever is guidance circular has been given. So notification is a law in itself. Circular is an instruction given by the boss. Who is the boss? CBDT. And to their subordinate, they are giving the instruction. So this is what, students, is a fundamental difference. We will not get into much of depth right now. I think this much will suffice for MCQ purpose. Coming further, students, now quickly, as I told you, in GST law, students, you all are aware that the charge of GST is on the supply of goods and service. The chargeability, the taxable event for GST is what? The supply of goods and services. Similarly, what is a taxable event so far as the income tax law is concerned? What is a taxable event? So the taxable event of the income tax law is the total income of the previous year of every person. The total income of the person for the relevant previous year, this is the taxable event. Total income of the person for the relevant previous year, this happens to be the taxable event, students. Please don't use the word income. It is the total income. It is the total income. So the tax liability, students, calculation, you tell me, students, the tax liability calculation is on what? It is on the total income. The tax liability calculation is always on the total income. So are you supposed to compute the total income? Yes, you are supposed to compute the total income. How do you calculate the how you will compute the total income? There is a manner provided under the act on the basis of which the total income has to be computed. There is a manner provided under the act on the basis of which the total income has to be computed. Once the total income has to be computed, on that computed total income, you will apply the rate of tax. You will apply what? The rate of tax. What is the source of the rate of tax, students? Now if you see the source of the rate of tax, students, here, just taking the chart below, the source of the rate of tax, if I have to just quickly take the chart below, rate of tax herein. So this you should always remember and you should know. Although I have seen your module, students, while I am preparing the chart, if you would have noticed one thing, you have got the rate of tax even for what? Even for the companies and all, partnership firm, cooperative society, you are expected to know the rate of tax. Although please be careful, in the examination there will not be any question on company assessment, because for you all individual and HUF at IPCC level you are going to learn. In final CA you will also learn for partnership assessment and company. However, rate of tax has been specified in your module, so just be very careful. So students, once you calculate your total income, once you have calculated total income, on that total income you will apply the rate of tax. On that total income you will apply what? You will all apply the rate of tax, isn't it? Now how will, once you have to apply the rate of tax. So students, in this case, this is how you go about it. All of you will pay attention. The total income, which is your taxable event, total income for a previous year. On this total income, apply the rate of tax. Now, rate of tax, students, tell me, what is the source of rate of tax? All of you will answer me in this. Rate of tax. Students, one more thing. If you are copy down this one, so please also refer, the notes are for chart number 1. Whenever you will copy down this, ensure to write that this note is for chart number 1. Fine, so that the linking is there. You are taking the notes in your notebook. Okay, that is fine. But please ensure to make a reference that it is for chart number 1. Now students, can you tell me rate of tax? The rate of tax. What is the source of the rate of tax, students? Source of the rate of tax? Anyone? Rate of tax? Annual Finance Act. Annual Finance Act. Anurag is asking, sir, how many total lectures will be there? I think the timetable is also known. Income tax is approximately around 50 to 60 hours. Revision lectures would be there, 50 to 60 hours. So the most comprehensively I'm going to do the revision, because obviously the length is very high, and we will also ensure to make it very comprehensive. Monday to Friday you will reserve your slot for income tax revision. So this will continue till September, mid of September, because after around 18th of September you will have your income tax session. Okay, in terms of number of hours, 50 to 60 hours comprehensive revision that we are going to do in this particular session. So again I'm repeating, 50 to 60 hours of full revision primarily we are going to do for income tax. So this is the most exhaustively you can just think about it, that your revision will be done. Every students are asked, saying very true, students. Fairy, updates, Nishant, they are saying it is from the Finance Act. Adam, Siddharth, they are saying, students are saying that it is through Finance Act. Perfect. It is indeed through Finance Act. However, let me ask you this question, students. Long-term capital gains tax rate or lottery winning tax rate, I think all of you are aware. Long-term capital gains tax rate and the lottery winnings tax rate. Are you aware of that? Tax rate for long-term capital gains, tax rate for lottery winnings. I think the students are aware of that. So those tax rate for the long-term capital gains or the lottery winnings, 20%. Harish has said long-term capital gains is 20%. Fair enough. Lottery winnings, it is 30%. Lottery winnings, it is 30%. Are you aware from where you got this 20% and from where you got this 30%? You are getting this 20% and 30% from a section which is there in the Income Tax Act itself. You are getting this rates which are in the section covered in the Income Tax Act itself. Which are the sections? So the section primarily for your IPCC. So please take a note like this. Students, the first source, yes Priyanka, the first source is the Income Tax Act, the Income Tax Act 1961. In this Income Tax Act 1961, you will get what? The special rate of taxes. What you will get? The special rate of taxes on what? On special income. You are special, isn't it? So, special rate of taxes on on the special income. Rahul, towards the end I'll answer this. Please ask me, Rahul, towards the end I'll suggest you. Now, as far as some students are asking, sir, printed version of the notes, can we get it from somewhere? Don't worry, I'll give me a day's time. I'll tell you something. Printed version of the notes. Students, the Income Tax Act 1961, special rate of tax. So, irrespective of the person who has earned long-term capital gain, I am an individual, I have earned long-term capital gains, or I have earned lottery winnings on this 30% flat rate. You are an HUF, you have earned long-term capital gains, or you have got the lottery winnings on you 30%. So what I'm trying to say to you is that if there is a special rate of income tax on a particular income, then irrespective of what? Irrespective of who has earned that income, the tax rate will be the same, uniform tax rate. So you will say here in the bracket I'm writing, students, in the bracket I'm writing uniform tax rate. Irrespective of the person who has earned the income. Uniform tax rate irrespective of the person who has earned the income. Quick example, students. Long term, now I'll just also give you the section. Long term capital gains. Now students, these are the minimum rates that you are supposed to remember. In final CA there would be a lot of rates that you have to remember, special rates you have to remember, but IPCC only 4. Which are those 4? Let me give you quickly. Long term capital gains 112, it is 20%. 112A 10%. Fine. Short term capital gain of 111A 15%. What are these things? We will look upon later on. But herein, then lottery winnings. These are the 3 rates. 115BB, that is 30%. Yeah, Gautam, that is a dividend taxation that we'll touch upon a bit later. But at least these rates, students, the casual income, 30%. Now, these number 112, 112A, these are the section number. These section number are in the Income Tax Act itself. And therefore I say what? In your total income, students, in your total income, if there is any special income on which there is a special rate of tax which is specified, then on that special income you will apply the special rate of tax. On that special income you will apply the special rate of tax, and on the balance total income, on what? On the balance total income you will apply the rate. Now comes the balance total income. The second point, students, the second point, the Finance Act. Can you tell me which Finance Act is applicable for all of you? The Finance Act Quickly. Which Finance Act for November attempt? For November attempt, which Finance Act is applicable? It is 2019. 2020 for May 21 students. 2019 indeed. Now in this case, the the Finance Act 2019 for November attempt, for May 21, November 21 it will be the Finance Act 2020. So you can quickly write here in below. On the balance total income, on the balance total income, the rate as per, on the balance total income, the rate as per the Finance Act as applicable. Student, this is important word. As applicable to the respective person. Yes, Thomas, there were 2-3 Finance Acts primarily that came into picture. On the balance total income, the rate as per the Finance Act as applicable to the respective person. Why? Because if you are a company, domestic company, foreign company, the rates are different. If you are a partnership firm, then the rate is different. If you are an individual HUF, again the rate will be different. Cooperative society, rates are different, isn't it? Now this rate, now you can write here, refer chart number 1. Chart number 1 and chart number 2. 1 and 2. 1 and 2. Make a reference. Students, in your notebook also, if possible, apply 2 or 3 color pen, if possible. While you maintain a separate notebook, you will apply this thing so that your revision is also happening parallelly in a better manner, in the perfect manner. All of you are through with this one, students? Done with this? If you're done with this, let's then come back to the chart number 1 again. Couple of quick points. I'll also deal with a marginal relief as well. One question on margin relief we'll do immediately, because even marginal relief question would be applicable for your MCQ. Okay. Now I think all of you are through with this. So let me come back to the chart. Now friends, if you see over here, I was talking about the rate of tax, isn't it? So this is what the situation is. So individual HUF. Now if you talk about for individual and HUF, so there is a slab rate already. So there is a slab rate. So all the students who are saying for individual HUF, there is a slab rate. Yes, there is a slab rate. And what is the slab rate? So you have got the slab rate over here. So quickly, friends, I think all of you are aware of the slab rate, so I'm not discussing the slab rates right now because everyone knows about it. The special thing is about the rebate of 87A, students. Can you see this rebate of 87A? So this slab rate, I'll test you through a small question. Don't worry, a small question. I'm going to test you your calculation, tax calculation fundamentals. The rebate of 87A, students. If your total income, students, can you see in the red shade? Now you'll say, sir, why red shade? I'll also tell you one rule of this red shade. Students, wherever you find the red shade, it means it is an amendment. Wherever you will find a red shade in this particular chart, it means it is an amendment. Okay, so just keep that in mind. So, or the latest provision or an important provision. That is the way we have done it so as to highlight it. Now, if your total income is up to rupees 5 lakhs, then the rebate that you will get would be up to what? Up to a maximum of rupees 12,500. Maximum of rupees 12,500. the rebate that you will get would be maximum of rupees 12,500. This is the maximum amount of rebate. This is the maximum amount of rebate, students. So this is how we will have to look upon to this one. So 5 lakhs total income, maximum amount of rebate would be rupees 12,500. Now students, one point which I will tell you, there is also surcharge which is there after this. So just have a look to surcharge. Now surcharge, students, you will have to remember this part. You have to be very careful. For an individual HUF, AOP, BOI, artificial juridical person, the first category, if you see, there are 4 rate of surcharge. There are 4 rate of surcharge, students. If this category is individual HUF, AOP, BOI, if this category's total income exceed rupees 50 lakhs, then the surcharge would be at 10%. If their total income exceed rupees 1 crore, 15%. If their total income exceed rupees 2 crores, there is now a higher surcharge. So the normal surcharge up till now, was to 15% only. To 15% only. 25 and 37% is considered as a higher surcharge. And this 25% would be applicable when your total income exceed 2 crores but not more than 5 crores. And if your total income exceed rupees 5 crores, then in that case your surcharge rate, students, would be 37%. Then your surcharge rate would be 37%. Now students, can you see this particular thing in the box? This part. However, the enhanced surcharge has been withdrawn on tax payable at special rate under section 111A and 112A on the short-term capital gains or long-term capital gains. You'll say, sir, what does it imply? Shall I give you a very small question right now, but we'll discuss it, students, once in the capital gains topic. But here I'll just touch upon very briefly this concept. All of you will take a note of this particular thing, so you can just write, refer, case study in the notebook. So I'll just give a brief one because this is important for your MCQ purpose. Don't expect a full-fledged question. You'll get only MCQ. Fine, students. So let me then come back to this question set. All of you just take a note of this one. So a total income, Mr. A. Mr. A is calculating the total income. Now this is also chart number 1 and the topic is the enhanced surcharge. Okay, so if the total income is say rupees 3 crore, just normal thing. So you will, I'm not right now interested in calculation of tax. I'll make you practice calculation of tax in my MCQ. In my marginal relief question. Tax will be calculated? Yes. Now when you do a surcharge, students, here on this tax, you will take a surcharge because surcharge would be 25% of the tax amount. Because the total income exceed rupees 3 crore and it does not exceed rupees 5 crores. Then students, take a subtotal and thereafter on that HEC at 4%. HEC at 4% on this amount, and then you will get the total tax liability. Fine, students, total tax liability. This is the normal part. So case study number 1, I'll write this as case study number 1. You can also write this as case study number 1. Case study number 1. Fine, students. Fair enough. Now, let me take up the case study number 2 for all of you. Now I'll give the twist. I will now introduce a twist in my question. Now total income calculation, students. Total income calculation. Let's have a look. Here, students, for Mr. A, PGBP. Now I'm writing, students, PGBP 1.75 crore. 1.75 crore. Then short-term capital gains. This is chargeable in triple 1A. Triple 1A. Now, many students will be very excited to know, sir, what is this triple 1A? So, those who are not aware of triple 1A short-term capital gains, that is a transfer of security in a recognized stock exchange on which STT has been paid. Remember that. That is what is subject to the tax rate under 11A, triple 1A. Short-term capital gains on transfer of security in a recognized stock exchange on which STT has been paid. That gain is charged under triple 1A. 15%, yes, Priyanka, 15%. Now, students, let's say this is 1.5 crores. 1.5 crores. Fine. And accordingly, I'm getting my total income. How much is total income? I think 3.25 crores. 25 crores. 3.25 crores. So students, 3.25 crores, and now I'll calculate the tax. So how I'll calculate the tax? I already told you. First one, tax, special tax rate always. What is the first point I have made you write in calculation of tax liability? First point is special tax rate under Income Tax Act. This is the first point under the Income Tax Act. So what is the special tax rate? Triple 1A, and I think Priyanka already has said it, 15% you will apply on 1.5 crores. I don't want the answer, but just I'm giving you the format. Answer, you are having the calci, you can easily work it out. 15% on 1.5 crores. So this will always come first in your calculation. This will always come first in your calculation. And the balance total income, you will not write PGBP. You will write what? Balance total income. Don't make these mistakes, silly mistakes. On balance total income, the rate presentation is the key factor here. The rate as per the Finance Act. Which Finance Act you are referring, students? 2019. So yes, you will apply. So therefore now what is the balance total income? It is 1.75 crores. So 1.75 crores. And yes, you will apply, but you will not refer this as PGBP. You will refer this as what? As the balance total income. And please go, you will calculate the slab rate up to 2.5 lakhs. Nothing. 2.5 lakhs to 5 lakhs, 5%, 5 lakhs to 10%, 5 lakh to 10 lakhs, 20%, and then beyond 10 lakhs up to 1.75 lakhs. So it means 1.65 crores. Students, 1.65 crores would be at 30%. So obviously there would be a huge amount, isn't it? Fine. So you will take a subtotal. Now don't do the rebate of 87A. Rebate of 87A, will it be applicable? And the answer is no. Answer is no. Why? Because of the fact the total income has already crossed the threshold of 5 crores. So don't do the rebate of 87A. Now add the surcharge. Now, although your total income here, now surcharge, students, surcharge. Although your total income has exceeded rupees 2 crores, although your total income has exceeded rupees 2 crores, but as per the amendment on the short-term capital gains, which is chargeable under section 111A, on that the higher rate of surcharge will not be applicable, and therefore on that amount the normal rate of surcharge. What is the normal rate of surcharge? Because the income has exceeded 1 crore, the normal rate of surcharge would be 15%. Only the normal rate of surcharge of 15% would be applicable. So whatever, students, the tax that you have calculated, so the tax in point number 1, what is this point number 1? This above point number 1 that you have calculated. tax in 1, surcharge rate, surcharge at 15%. So you'll calculate this part. Okay, and the tax in 2 that you already have calculated. Surcharge rate, apply on that tax rate, the tax in 2, apply on that tax amount, the surcharge at 25%. Surcharge, again I am repeating students, surcharge is always applied on the tax amount, not on the income. Don't make this blunder applying the surcharge on the income. Never ever you will make this blunder. Did you all got this one? Fine students. So with this primarily you will make this particular surcharge calculation, and then you will take the subtotal, and after taking the subtotal, students, as we all know, HEC at 4%, and this is a subtotal. This is how, students, you will do it, and that's your final tax liability. Now HEC of 4% to be applied on this. Okay, now you can keep playing the games based on what I have given to you. You can keep playing the games whenever you are tired, feel bored. So play the games like total income. If it is say 6 crores, okay, and in that 6 crore, say for example there is 1.5 crore of your say short-term capital gains of 111A. So whatever the tax that you would have calculated on this 1.5 crore as per the special rate under 111A, on that tax amount the surcharge will be 15%. The surcharge will be 15%. Why 15%? Because I told you higher rate of surcharge will not be applicable. Okay, and on the balance total income, primarily what we will say, it will be at 25, it will be at 37%. So on the whatever is on the balance, the tax on the balance total income that you have calculated, you will apply the higher surcharge rate of 37%. Why 37%? Because your total income has exceeded more than rupees 5 crores. Your total income has exceeded by more than rupees 5 crores. This is the reason precisely what you are taking into account. Harish, I will answer this general queries towards the end so that the momentum is not lost. Why we are taking the surcharge at 25% for the second case, as the balance is less? No. Priyanka is asking me that, sir, why you have taken 25% over here? She is asking why we are taking 25% over here. Because what she is saying is that, after reducing 1.5 crores from 3.25 crores, your balance total income is 1.75 crores. Your balance total income is 1.75 crores. So she is saying that you should not have taken 25%. No, Priyanka, it is not that way. The parameter of surcharge is the total income. Is the total income has exceeded rupees 2 crores? That is the question that has to be answered. Not the balance total income, but the total income. And yes, the total income has exceeded what? Exceeded 2 crores, and therefore it has to be 25%. But only for the special income, which is 111A or 112A. For that special income, the normal rate of surcharge would be applicable. And what is the normal rate of surcharge? Here, the fact that the total income is already more than 2 crores, the normal rate of surcharge would be 15%. So please don't make this mistake. Primarily, that balance total income, don't see balance total income, you see total income. Okay, for the special income of 111A and 112A, there is a normal surcharge. And what is a normal surcharge? There are two normal surcharges, 10% or 15%. This 10% or 15% will depend upon what? Whether your total income is more than 1 crore or your total income is less than 1 crore. So therefore, students, please be careful. You have to see the total income. and not that income. You have to see what? The total income to decide what would be the rate of surcharge that would be applicable. So I hope that students you have got hold with this particular point. All of you through with this? Clear on this part? Any doubt? You can just let me know. Anurag, I have read only for 112A. The rebate is not allowed. Yeah, Anurag, we'll do that 87A rebate. You're talking about 87A, if I'm not mistaken. 87A. Yes, you're correct here in interpretation, but I'm not touching upon right now 112A the rebate, but definitely in capital gains we will capture this one. There is a that's the reason why, Anurag, in 112A there is a limit of 1 lakh also exemption. I have not touched upon that deliberately, because if I do it right now in my first lecture only, it will be very premature. I'm trying to avoid that thing at this stage. Fine, students. Okay, let's, all of you are clear, so that's good. So let's try to take the things further now. Fair enough. So I'm done with this. So please, students, refer this particular calculation always. MCQ for your examination. MCQ, student. These are all MCQ based question. Now comes the margin relief. But before I do margin relief, let me first wrap up this particular concept. So margin relief also, students, couple of quick questions we will do it so as to ensure that you all are in the similar line. So students, can you see this? Special income 30% lottery winnings. In final CA, there are many special rate which is there in income tax act that you are supposed to remember. In IPCC, only few. 15%, 10%, 10%. There are two sections. Students, there is one 115 BBDA also. You will say, sir, what is the section 115 BBDA? So the dividend that you have received, like I am receiving dividend income. Okay, and my total dividend, students, I am an individual. My total dividend has exceeded more than rupees 10 lakhs. Has exceeded more than rupees 10 lakhs. In that particular case, up to rupees 10 lakhs, I will claim an exemption, and the dividend in excess of rupees 10 lakhs, the dividend in excess of rupees 10 lakhs, that will be charged at the rate of 10%. That will be charged at the rate of 10%. So that is what is the special rate. Again, I am repeating, where you will find this special rate of 10%. The special rate of 10% you are going to find in the Income Tax Act itself, which is what I told you. And when you will do your tax liability calculation, your first tax liability would be as per the special rate of tax. Your first tax liability would be as per the special rate of tax. Thereafter, on the balance total income, you will apply the tax as per the Annual Finance Act, which is, for you it is FA 2019. For you it is FA 2019. So students, this is how it has to be considered. Others, I will not touch upon right now on others, but students, we will see AMT. Can you see this AMT? AMT 18.5%. MAT, although it is not required, but AMT, students, AMT, full form of AMT is, you also have AMT, students. Are you aware of that? And in our chart, students, in our chart, we have covered AMT very comprehensively, because you can expect one question on AMT in your examination. 115 BBE unexplained income is there. Forget it for the time being. Okay. Although these are all final CA sections and all, for the time being you can just forget it. This is on unexplained, on rates, income tax search, income tax raid when it happens. Whatever are the income that gets generated in the income tax search, income tax raid, on that income, the rate to be applied would be as per 115 BBE. Very true. AMT full form is alternate minimum tax, students. Alternate minimum tax, very important chapter for your inter CA. You can expect one question there in the examination. We will deal with this particular AMT, and student, this index of the chart is very important for all of you. This index of the chart. So see, if you see the index of the chart which you have prepared, in every chart, what is that you are going to get it? You will see it very, very clearly. You will see it very, very clearly in this charts and all. Okay, so in this context, students, chart number 13, we will do this AMT also. So this is the sequencing. Okay, so we will do AMT in chart number 13. Now coming back to our discussion, let's come back to our discussion here. Now students, let's do one margin relief question. First of all, margin relief just above this part. This is for the margin relief. Margin relief, students. Now step to calculate the margin relief. Let's quickly run through this. Calculate the tax including the surcharge. Calculate the tax including the surcharge. So that is the first one. Thereafter, second point is tax payable on rupees 50 lakhs. Tax payable on rupees 50 lakhs or 1 crore or 10 crore as the case may be, depends on the levy of surcharge. Meaning, like for company and all, students, the surcharge limit keeps changing. So you will then calculate the surcharge also. Okay, so surcharge would also be calculated on that. And thereafter what, students? You will calculate the extra tax which is payable. Extra tax which is payable, and thereafter you will give the marginal relief point. Now let me, in fact, you can just write here one practical, refer notebook for practical case study, for practical question. So I'm just giving you a couple of quick practical questions to solve this particular part. So here, students, just make a referencing quickly. Make a referencing of this one. Margin relief. And chart number 1. Margin relief, chart number 1. So here Mr. X has a total income of rupees 1 crore 60,000. Compute the tax liability for AY. (2020-21). Mr. X has a total income. So students, first of all, in the solution, so particulars amount. So the first one, tax on (1 crore 60,000). So how do you go about it? Up to 0 to this thing, nil. So at 5%, you will show the calculation like this, students. You have to show this calculation. Then presentation is the key. You get the marks if you have properly presented the answers. And thereafter, students, thereafter what? Thereafter, in excess of 10 lakhs up to 1 crore 60,000. So this we have calculated already herein. I'm just straight away giving you at the rate of 30%. Just confirm the amount. I've calculated this one as 27,18,000. All of you just quickly run through this one. 27,18,000. Fine, students. Just confirm to me. I've just worked out primarily before the session so that there is no waste of much of time. But you also do the parallel calculation. (28 lakhs 30,500). Anurag, maybe in capital gains I'll let you know, because we will just be off track right now. Okay, we'll just go off track at this point of time. So just let's focus only on this particular chart. 28 lakh 30,000. I hope that this particular part is correct. Okay, now please ensure that one thing, students. Now you will add the surcharge. Add the surcharge. Surcharge, students, because it has gone up to more than rupees 1 crore, your surcharge rate would be at 15%. Surcharge rate would be 15%, and which I have calculated as 424,575. And now the total that you are getting is 32,55,075. Nishank, what about the HEC, the cess? The cess part, just pay attention to this. The concept of marginal relief is introduced just to give the relief from the levy of surcharge. Relief from what, students? From the levy of surcharge, just because my income has crossed the threshold amount. Please have a look over here. My income, students, here just has crossed more than 1 crore, and therefore from 10% surcharge, now my surcharge rate on the entire tax amount has increased to 15%. So that is a very higher burden. That is a very higher burden on me, and therefore to give the relief on this higher burden, that of the surcharge, just because it has marginally crossed the threshold of surcharge or higher surcharge amount, as the case may be, that this marginal relief calculation would be made. The marginal relief calculation, students, will be made immediately after what? After the surcharge, and therefore it is before the cess. So immediately after the surcharge and before the cess. So how do you calculate herein? Oh, okay. So students, I'm just taking to the so the tax which was there that we have calculated was 32 lakhs 55,075, isn't it? And now on that you will apply the marginal relief under section 89. Let's quickly run through this and wrap it up, this particular part. So less marginal relief under section 89. Now what exactly is the concept here? Increase in tax, in a simple wording, students, increase in tax minus increase in income. Minus what? Increase in income. Always remember like this: increase in tax minus increase in income. Now my tax got increased. What is that increase in tax? Because my total income just exceeded by 1 crore. My total income, because it got exceeded by 1 crore, therefore there was an increase in tax on account of the higher surcharge of 15%. So therefore here, students, increase in tax, how do you calculate this one? 3255 already you have got. Can you calculate the tax on, can you all calculate the tax on 1 crore rupee? Tax on 1 crore. Don't take cess, only up to the surcharge amount. Don't take cess, only up to the surcharge amount. 32 lakhs 55,075. Quickly, students, all of you will calculate tax up to 1 crore. Don't take HEC right now. Don't take HEC right now. Nishank has calculated 30,93,750. 30,93,750. So this is the increase in tax. So on 1 crore it is 30,93,750, only up to surcharge, only up to the surcharge. Don't take HEC. That is what I have told you. So therefore 30,93,750. Jaya, perfect. Arvind, You have to see the calculation again. Up to 1 crore. Arvind, did you apply the surcharge? Surcharge would be only up to 10%. Whatever tax that you have calculated of rupees 1 crore, whatever tax that you have calculated of rupees 1 crore, Arvind, you will apply the surcharge. You will apply the surcharge only of 10% on that rupees, on the tax of rupees 1 crore. And that is what, Arvind, you will do. Now increase in income. Now we all know increase in income. So increase in income you already know. 1 crore 60,000 minus what? Minus 1 crore. And therefore, yes, Trinath, Ferry, your amount comes to the difference between the two students herein, final amount, this minus this, 161,325 minus 60,000. Priyanka, 161,325. Nishank, 161,325 minus 60,000. So it comes to what? 101,325. Gautam, 101,325. That is what you are going to reduce. 101,325 is what you are going to reduce. So this will give you what? The tax before the cess. The tax before the cess, which is about what? 31,53,750. 31,51,750. And now, students, you will apply what? The HEC. HEC of 4%. You will apply HEC of 4%, and that is how you will get the answer. Fine, students. Now, quickly a homework question which I am going to give it to you. Would be, and if solve it all of you, in this case, partnership firm, students, partnership firm, same question in above case. In the above question, yes, Sushant, above question, if it is partnership firm instead of individual, students, so you will calculate the tax liability. Ferry has given the final answer. Yes, Ferry has given the final answer. After HEC, Ferry has given the final answer 32,79,000. After HEC, Ferry has given the final answer 32,79,000. So students, above question, substitute with what? From an individual, you substitute this with partnership firm. This is your question for practice. You will say, sir, when we will get the answer? Family. By the way, I'll just tell you the answer, final answer, but you will practice this one. Final answer, the tax liability is 31,82,400. You will practice, but please practice this one, students. The final answer would be 31,82,400. This is after HEC. Okay, but the step will remain the same. You will calculate the tax, then you will add surcharge. Now surcharge for a partnership firm, students, you will refer the chart. Chart is there, don't worry. You can refer the chart and you will know if the total income exceed 1 crore for the partnership firm. If the total income exceed 1 crore for the partnership firm, the surcharge rate would be 12%. 12% rate of surcharge will be applied, students. And accordingly, in that regard, you will tax plus the surcharge rate of 12%. You will take the subtotal. Tax plus surcharge rate of 12%. You will take the subtotal, and then you will apply the margin relief. Now, margin relief, same thing. Increase in tax. How you will calculate increase in tax? The tax that you already have calculated minus the tax that would have been charged if the total income would have been 1 crore. Now please understand, for a partnership firm, students, for a partnership firm, you will find that their surcharge starts only after the total income exceeds what? Exceeds rupees 1 crore. only exceeds when it exceeds rupees 1 crore. Can you see this particular chart herein? For a partnership firm, primarily, so this is for cooperative society and partnership firm. So if my total income is only up to 1 crore, then I will only calculate the tax at 30%, which is 30 lakhs. 30% tax on 1 crore, 30 lakhs. You will say, sir, basic exemption limit? No, there is no basic exemption limit, students. There is no basic exemption limit. So on 1 crore, 30 lakhs. So the increase in tax would be whatever is tax plus surcharge that you already have calculated on the total income of 1 crore 60,000, tax plus surcharge, because surcharge would have been charged because your total income has increased from beyond 1 crore. So therefore that tax amount minus what? Minus the increase in the income, students, and the increase in the income in this case, we all know. Increase in tax, we already have calculated. An increase in income is 60,000. Take the difference. Take the difference, students, primarily, and that difference is what will be the relief under section 89, and take the net amount after relief. Take the net amount after relief, and on that net amount you will add the cess at 4%. On that net amount you will add cess at 4%. Did you all got this one, students? Fine. I have already given you the final answer. I've already have given you the final answer. I expect all of you to ensure to solve it once. Take the practice, students. Important. You should do the practice. Sushant. Sushant, you can say it's a comprehensive revision because the number of hours which I am taking in this revision is much higher. Approximately, as I said, 50 to 60 hours. If you see my timetable, it will go up till mid of September. So herein, students, let's look upon to this one now carefully. Quickly, students, you are done with this. We come to chart number 2. Chart number 2. Now, students, I want you the simplest part. Students, since we will do a lot of practice in PGBP and capital gains, the big topic, some small homework I will keep on giving it to you. You say, so what is the small homework? So the small homework is your favorite homework, like residential status, the test of residential status. I am going to do with you, but please allow me to invest my time in the tricky areas, the technical areas. So what you will do as a homework, which I am going to revise tomorrow in my the session is not over, session is going on, because right now I am going to do a very technical point with all of you. Second chart, students, residential status and the scope of total income. This is what we will focus it right now. Okay, residential status. So depending upon, students, depending upon your residential status, you have the scope of the total income which is chargeable to tax under the act. The scope of the total income which is chargeable to tax under the act is determined. Whereas if you are a resident, and if you are an individual resident and ordinary resident, if you are a resident and ordinary resident, then students, your global income, what do you mean by global income? Indian income plus foreign income. Indian income plus foreign income. Now you will say, sir, what is Indian income? Indian income, students, means either of the two things should have happened in India. Then we can say it is an Indian income. Either of the two things should have happened in India, then it is an Indian income. What is that? Either the income has accrued or it has deemed to have accrued in India, or the income has been received in India. So one of the two things should have happened. Either the income has accrued or deemed to have accrued in India, or the income would have received in India. Then in such case, that income is referred as an Indian income. That income is referred as an Indian income. So therefore, what is foreign income? Foreign income means when income has neither accrued nor it has received. Income has neither accrued nor has received. Then this would be considered as what? As the foreign income. This would be considered as what? As the foreign income. This would be considered as the foreign income. Neither accrued nor received. Did you all got this one? This is exactly how, students, we will look into this particular proposition. Okay, so if I am a resident, an ordinary resident, and ordinary resident, then my global income, which means Indian income as well as foreign income, both is chargeable to tax under the Act. Both is chargeable to tax under the Act. Whereas if you say, no, I am a non-resident, I am what? A non-resident, then it is only what? Only Indian income which is charged to tax. For a non-resident, students, only an Indian income which is charged to tax. And what is Indian income? Either the income would have accrued in India or the income would have received in India. Okay, now students, if you are an individual, an HUF, then there is one more status. There is one more status which is there for all of you, and that status, students, is, what is that status? Resident, but not ordinary resident. Now, the scope of the total income for a resident but not ordinary resident is bit different. A minor change. Otherwise, whatever is the scope applicable for resident and ordinary resident, the same scope is also applicable for resident but not ordinary resident, but with one distinction. This is where you all make mistake. Let me give you a case study, small case study. Students, say for example, you all will become chartered accountant tomorrow, and then maybe you are going abroad for the purpose of taking up the employment. I'll use this example again tomorrow. Students. Okay, you are a chartered accountant going abroad for the purpose of taking up the employment. Okay, 5 or 10 years you have worked there, but at the end of the day you wanted to return back to India. At the end of the day, it is the country call, the home calling. So therefore you came back to India. Now you are coming back in India for permanent residence again. Now you don't want to go back. Earlier you were coming in India and then you are going back, visiting your parents, and then you are going back. But now you have decided, now we will take up a job in India and I'll settle down in India only. So then what you have decided in this case? Once you come in India, students, that year what? You will become, chances are very high, you will become a resident. Why you will become a resident? Because you would have learned that to become a resident, I need to stay in India 182 days or 60 days, and in the last 4 years 365 days. To become a resident, I need to stay in India for 182 days or 60 days, and in the last 4 years 365 days. That is a minimum stay. So one of the two things you just need to satisfy. So either 182 days or, as I told you, 60 days minimum and 365 days in the last 4 years. By doing that, students, you will become automatically what? A resident. So chances are very high, please pay attention, chances are very high that when you have come back to India, you will become a resident. Chances are very high that on that year itself you will become a resident. In that year itself you will become a resident. But to become an ordinary resident, to become what? An ordinary resident, there are further 2 additional tests. That has to be satisfied. To become what, students? Ordinary resident. There are further 2 additional tests that has to be satisfied. You will say, what is that additional test? So you will find, students, here is the additional test, which I expect all of you to ensure to go through it once before you come for the tomorrow's class. So these are the additional tests. So therefore, and definitely after spending 10 years in Singapore, now you are coming in India for permanent residence, then you will not satisfy both these additional tests. You will not satisfy both the additional tests. For some years, at least for some years, you will not satisfy the additional test. So what is your status in that year? When you returned in India, your status was resident, but because you have not satisfied the additional conditions, therefore your status is resident and not ordinary resident. Resident and not ordinarily resident. This is your status. Which year I am talking about, students? Which year I am talking about it? I am talking about the year in which you have came back to India. The year in which you have came back to India. So that year your status will be resident but not ordinary resident. Students, now please pay attention. Last point, students, just be very careful. Here you all will make mistake. Now 10 years, students, you were there in Singapore. 10 years. Now you definitely would have got the bank account. You would have also made a lot of investment in Singapore. So you have got a bank in Singapore wherein you are still maintaining the account. Citibank Singapore. Citibank Singapore, you are still maintaining the account. And you would have made a lot of investment as well. You would have also made a lot of investment as well in Citibank Singapore. In Citibank Singapore, you have made a lot of investment there. Okay, so therefore through that investment, you are getting the investment income. Now that investment income, you are getting the amount credited directly to Citibank Singapore. To Citibank Singapore, and thereafter you are making a remittance from Singapore to India. That is the fact of the case. So your status presently in India is resident but not ordinary resident. Resident but not ordinary resident. So in that particular case, students, what will be the taxation implication? Let's have a look. So the taxation implication, students, is this. Please have a look. First of all the income, students, that is received in India, will it be taxable for you? And the answer is yes. Now can you say, please pay attention, students, I'm asking you a question to all of you. This investment income that you got in Citibank account in Singapore, the investment income that you got in Citibank account in Singapore, that income was credited to that Citibank account in Singapore, and thereafter you made the remittances from Singapore to India. Can I therefore say that this income, the foreign income, is received in India? Can I say that investment income arising in Singapore, did I received in India? Can I say so? Did I received in India? Can I say that? Is my question to all of you. Let me see your answer. Quickly, students. Arvind, Ramnath, Jaya, Priyanka, Kotla, Sriswara, Anand Kumar, Nishan, Padma, Fairy, Gautam. So students, this is not received in India. Why it is not considered to be received in India? The reason is, this is a remittance. You have received already in the bank account in Singapore. You have received already in a bank account in Singapore. So this is known as not a receipt but a remittance. Having received already in my bank account in Singapore, that was my bank account in Singapore, that from that bank account there was a remittance which was being made. Remittance is not equal to receipt, and therefore what? Therefore it will not be charged. This will not fall under point number 1. So please don't make a mistake here. Easily you can goof up. Income received in India, can I say this is an income received in India? And the answer is no. It is received in Singapore and subsequently remitted to India. It is received in Singapore and subsequently remitted in India. Yes, Priyanka. And accordingly, now coming to point number 2. Income accruing or arising or deemed to have accrued in India. This investment income which you have got in Singapore, the investments are made in Singapore. Therefore, the interest income also would have arisen to you in Singapore. the interest income would have also arisen to you in Singapore? Again, the answer is yes. So the interest income has been arised to you in Singapore. So question therefore to all of you is, this income has accrued in Singapore, and accordingly it is not accrued in India. It is not accrued in India. The investment is made in Singapore, and therefore it is not accrued in India. That is your point number 2. Let's see. So therefore again point number 2 is not applicable. So point number 1 in my case study, not applicable. Point number 2 in my case study, not applicable, because it is neither received in India nor accrued in India. Okay, neither received in India nor accrued in India. Now comes the third point. Let's have a look. The third point. Income accruing or arising outside India. Is it an income which is accrued outside India to you? And the answer is yes. We have just now have seen this as an income which is accrued to you outside India. So income accruing or arising outside India from a business which is controlled in India? No, this is not a business. This is my investment income. This is not a business. This is my investment income. So this will fall under point number B. This will fall under point number B. And what is point number B? Any other source. So income which is accrued outside India from any other source. Which source? Investment source. Where it is received? Where it is received? Outside India. So what will be the situation finally? What will be the situation finally? It is not taxable. It is not taxable. Students, if you tomorrow go abroad, or your friend would have gone abroad, or your relative would have gone abroad, and tomorrow when they will come back in India, please remember this thing. This is definitely going to be made applicable on them, because for spending so many years in that foreign country, they would have definitely got some of the investment in the foreign country, and they would have bank account in the foreign country. So the investment income is getting credited to their bank account in the foreign country. So therefore this income is received outside India, accrued outside India. Okay, and the fact that it is arising from a source, not a business, therefore this particular income, while your friend or your relative has a residential status of, which residential status, students? Resident but not ordinarily resident. Resident but not ordinarily resident. So till the time your friend has this status of resident but not ordinarily resident, this income will not be charged to tax. But only request is that please receive this income, please receive this foreign income in the foreign bank account only. Because if you receive this foreign income in the Indian bank account, then this is not a foreign income. It will become an Indian income. So what is a strategy that you can suggest to your relative? What is a strategy that you suggest to your friend? The strategy would be, if you have the bank account in your foreign country, get that foreign income which is accrued outside India in the foreign country itself. Don't bring this money in India. Don't receive this money in India. Receive in the bank account outside India, and thereafter what? Receive this money in India. Thereafter receive this money in India. How you will receive the money in India? Through remittance. But first in foreign bank account, then remit it in India. You will not be charged to tax. Okay, I hope that this point, this is the trickiest point of the entire scope of the total income. Rest of it is very clear. Rest of it, students, is very clear. What is the clarity? Clarity is, this is your Lakshman Rekha. If you are a non-resident, then this portion is, I refer to this to be Indian income. What is Indian income? I told you already. Either the income would have accrued in India or the income would have received in India. Then that is what is my Indian income. So for a non-resident, only the Indian income is taxable. And what about this one? The foreign income, students. Foreign income. As far as the foreign income, will it be taxable to a non-resident? And the answer is no. It is not taxable to a non-resident. What about to a resident and ordinary resident? Resident and ordinary resident. For ordinary resident, world income is taxable. For ordinary resident students, world income is taxable. The global income is taxable. And since it is the global income which is taxable, accordingly, you don't have to worry. But for R and NOR, this is what is the game. And what is the game? Check out for R and NOR. Because he is a resident, you will argue that the global income should be taxable. To that the answer is the global income will not be taxable for R and NOR. The foreign income, the foreign income will not be taxable for R and NOR if that foreign income is an income other than a business which is controlled in India or a profession which is set up in India. So if that foreign income is other than a business, is other than from a business which is controlled in India or a profession which is set up in India, this foreign income will not be taxable. Students, one point which I just will like to share with all of you is that this R and NOR, this R and NOR, this R and NOR students will be for what? Please pay attention herein. This is for individual and HUF. Individual and HUF. For firm, for a partnership firm, for a company, primarily, and again R and OR also individual and HUF. Because for a firm, for a partnership firm, for an AOP BOI, for a company, we have only two status. And what is the two status? Resident and ordinary, resident and non-resident. Resident and non-resident. You will say, sir, why is it so? Because students, I think all of you may be aware of this point, that if you see over here, the ordinary resident test, can you see this one? The ordinary resident test is applicable only when there is an additional condition, and the additional condition is given only for an individual and HUF. Only for an individual and HUF. So students, here if you see whether HUF is R and NOR, so that is the additional condition, and on the left hand side it is for the individual. So to the person to whom additional condition is given, only for those person that we will further distinguish resident as resident and ordinary resident, or resident but not ordinary resident. We will further distinguish the resident as resident and ordinary resident versus resident but not ordinary resident. This is how we are supposed to deal with it. Did you all got this one, students? Now your assignment. Students, your assignment is, you will go through this particular residential status, this part, and you will revise only up till here. Only up till here. Okay, you will revise only up till here. So please, sheet number 2 is what you will quickly run through it, and sheet number 3 only up to scope, what we have done just now. Why is it so? Because when I start the tomorrow's session, I'll do a first quick recap of this residential status part. Quick recap of the residential status part, and what, students? And I will then start with section 9. Students, I can say in intermediate module, this section 9 has been mentioned. Although final CA content are given to you, but then I have seen ICI book to understand what kind of question they have asked in section 9. When this essentially section 9 is for final CA, then I came to know the nature of question that they are asking in section 9. Based on that, we will keep our tomorrow session. So that section 9 we will keep for the tomorrow session, along with the practical problems. Can you see in chart number 4 there are a lot of practical problems, students, which is coming. So that is what we will do, and also I will try to touch upon this income which is not included in the total income. If time permits, I will use tomorrow session to do section 10, or else we'll do it in the next class. After this is done, students, I'll do immediately house property. House property is one head that we are going to do, because again that will not take much of time. There are certain critical issue which we'll discuss on house property. Then, students, I will move to what? I'll then move to your popular head. If you say PGBP, I'll do PGBP. If you say CG, I'll do CG. Whichever one head you want me to do first, I'll do it at that point of time. Students, any query which you have now, you can ask me today's query. Yeah. So today's homework, students, are you aware of today's homework? Every day I will give you some homework for practice. So what is the homework? First homework is the margin relief question. This question of margin relief. Please ensure you will do this particular question on margin relief. Question number 2. What is the second question? Second question is not the second homework, not question. Second homework is chart number 2. Students, chart number 2 is what you are going to revise and come for tomorrow's session. Mukesh Mohata, how many classes? Sir, Mukesh, it is, as I told you, between 50 to 60 hours is the revision lecture of your income tax. Highest revision lecture would be for income tax. 50 to 60 hours we are going to spend, and thereafter, so accordingly 25 lectures, yeah, 25 to 30 class. Nishank, yes. Arvind, yes, as today. So Rahul is asking whether we should take a printed copy. I will just see if we can get the printed copy option also available. But if you are doing the printed copy of this PDF, my suggestion is that students take a color PDF. Total there are 28 charts. You will say, sir, no, there is not 28 charts. There are in between. In between there are some advertisement material, not advertisement, the information material, where we have to for contacting us. These are some this thing. 28 charts, students. Index is the key. There are total 28 charts. Can you see that? So there are 28 charts which are there. This is what you have to take print. So color print is what is advisable. We will also try to take a color print, and I will just see if we can have our color print stocks kept in a location from where we can do courier. So for that you just need to give me a day's time for me to see the logistic part from my team, and then accordingly I can get back to you. Okay, but please ensure to have a color chart, because you know there are a lot of amendments has been highlighted on red. Obviously students, color charts are expensive, but at least the revision lectures are free. So you save here and you spend say maybe 10 rupees per chart, 280 rupees. So, and please possible do a spiral banding. Tell that person also to do a spiral banding. Why spiral banding? You already know. It becomes easier. Otherwise you will make kite after some day, after the examination gets over, then you will make kite and or boat. Already the monsoon season is there, so we'll make a boat and then see how the boat is going around. Okay. Will you touch upon the case law, Ajay? Case law, Ajay, would not be there, but in capital gains like Manjula Shah case law, wherever the case law will come, I will touch upon to that. Fine, students. But one thing is there, that this chart would be done comprehensively, for sure. So don't worry about that. All these charts which we have covered, so as to foster your revision. You can see very meticulously. I also make a lot of, this is for the first time I made the inter-CA chart, because my charts are for final CA. So I've condensed everything for what is appropriate for your inter-CA. The same chart we prepare for final CA. Actually we have made, this is the first edition of inter-CA. For final CA it is already running in some 8th or 9th edition, I don't know. So you can just imagine. So I have to condense the material, the content, so as to be applicable for your level, plus practice questions of IPCC. So all whatever is covered in IPCC is what I have captured in the chart. Okay, now timing would be, students, would be 9:30. I'll tell you certain things. If Om sir lecture 9 o'clock he is getting over, 9 to 9:10 gets over, 9:30 maximum 9:35 we should be in a position to start. Technical hiccups are there because one session is ended and we have to resume the next session immediately. Channel is the same, so maybe through the technical session 5-10 minutes here and there can happen, but 9:35 we are going to start, and we are going to wind up by 11:30. Any other things that you want to ask, students? You can please ask me quickly. Case law, I think I have answered, Ajay. Case law, what I am going to do would be wherever like IPCC relevant case law, I am going to do. Manjula Shah is one in capital gains. You may be aware of that. But other than that, there are not there are something more. AS Builders Section 50. I remember it was asked in one of the attempt of inter CA. So we will do that. For short-term capital gains, I didn't got it. For short-term capital gains, update of CA. What is your name? Update of CA. For short-term capital gains, what? Surcharge would be at 10% or 15%. So please understand, update for CA. If your short-term capital gain is charged at what? 111A. If you're talking about that, see the surcharge which is there. If it is a 111A short-term capital gains. Other than that, short-term capital gains, that is different thing. But just I'm talking right now about 111A short-term capital gains. Then the surcharge primarily will not go beyond 15%. Will not go beyond 15%. Now your query is whether I should take 10% or 15% in that case. That depends upon your total income. If your total income has already have crossed, total income, not the balance total income. Total income, if it has already crossed 1 crore, then your surcharge would be on the 111A would be 15%. Okay, maybe the surcharge would be the surcharge on the tax on the balance total income. It can go up to 25% or 30%, 37%, depending upon the total income. If you would have crossed 2 crores or if you would have crossed 5 crores, as the case may be, that is how it would be considered. But if you say update for CA, if you say that no, my short-term capital gain is not of 111A, my short-term capital gain is not of 111A. If you are saying that, then your short-term capital gain, like for example, it is sale of land. I've purchased the land and I've sold it in 1 year. So it is short-term capital gain. So that short-term capital gains will have a normal surcharge of 10% or 15%, and even the higher surcharge of 25% or 37%, because the limit of surcharge of 10 and 15% is only for the two incomes. Which is the two incomes? 111A and 112A. But if it is any other income in any other head, then the surcharge would be for an individual HUF and all 10%, 15%, 25%, 37%, as the case may be. That exactly how it has to be considered. Thank you, Priyanka. I hope that I have answered your query update for CA. Ben, in the PGBP and short-term capital gains 111A question we solved. First we calculate surcharge at 15% for special tax rate, and where we wanna apply surcharge at 25%. Is it on the total tax part or at the tax on the balance? Ben, that 25% in my calculation, it is 25% in my calculation that you are asking. It is 25% on the tax on the balance total income. Tax on the balance total income. Sir, can we do module questions with your revision? Mukesh, I told you that students who are asking me that PGBP, they are considering it difficult, CG, they are considering it difficult. So I will also solve some module questions, or I will make you tell you at that time that look, PGBP this question, CG this question, immediately after that session, or we will solve it depending upon the alignment of the lecture. So today and tomorrow at least we will not require module, but whenever we will require module, you will have the module and I will also keep the module in the screen. And not all, but the tough question, important question, good question is what we will touch upon in our session, because we have got the opportunity to do this revision batch exhaustively. We'll definitely use the session, and we also have got that time as well. Yashmini, thank you, Ferry, Trinath, Jaya, Ajay. Yashmini, sir, what if short-term capital income exceed the normal limit percentage? Short-term capital gain income exceed the normal limit percentage? Means, can you explain your query again? Short-term capital gain income exceed the normal limit percentage. Which, first of all, Yashmini, I want to understand which short-term capital gain you're talking about it. Are you talking about 111A short-term capital gains or normal? And what do you mean by exceed the normal limit percentage? And finally, what is your question? The three things which I want to know. So just type it properly and let me know. Thank you students. Charts, I'm repeating. Chart students, it is already there in our Telegram channel, RPL Telegram channel. I have kept it. Plus, in case you don't have received it, it's my team number and this is my number, but only WhatsApp. We can just share with you the PDF file. Okay, we can share with you the PDF file. And again, I'm repeating, those who want to do a print, 38 print page, don't have to take 38 page. Index is given to you. You require a print of only 28 page. Okay, only 28 page. And please, if possible, do a color printing. Color printing A3. You can tell that person to print in a proper A3 and then take a spiral binding. At the most, the cost for all of you, like 10 rupees, also 15 rupees at the most, or 20 rupees, but the cost will not go beyond 500 or so, isn't it? So that will, you will say, but see the revision that you will do, quick revision. It's a very comprehensive thing. You will come to know we have captured and made this chart beautifully. Color print fairy, because I've told you, the color print, for the reason being there are some amendments, shades that we have done. So at least the lectures are free in this channel. So use this, whatever savings that you have done through lecture, try to use it in the book form. Take a print which is color print and do a spiral binding. So that way, less than 500 you will done with your 28 chart, and do only 28 chart. In between this this is there, you can just skip it if possible students, but tomorrow or day after tomorrow you can have this printed copy with you, so it becomes very easier. Are you getting this one? A3 color printed is recommended. Yes. If you have got printed copy by tomorrow or day after tomorrow class, students, it will be very helpful for you just to quickly go through it. So today, if you can get this copy done, so it will be really be very helpful for all of you. While you are listening the lecture, you can just keep marking, writing the way I am doing it. So really it will be good for you. Yashmini. Okay, Yashmini, the short term capital gain that you are referring is 111A. Income exceeds 1 crore. Then 15% will not be applicable on it. Yashmini, the answer is 15%. Because 10% and 15% are the normal surcharge. The higher surcharge starts from 25% and 37%. That is what will not be applicable to the short term capital gains of 111A or to that long term capital gains of 112A. So you are asking 111A short term capital gain, income exceeds 1 crore, then 15% will not be applicable on it. I have answered you. 15% will be applicable on that. Normal rate of surcharge is 10% and 15%. And what should be the surcharge be calculated? Yashmini, surcharge would be calculated on 15% in your question on the tax portion on this long short term capital gain. And if your total income is also less than 2 crores but more than 1 crore, then on the entire tax amount that you have calculated on that total income, you will apply the surcharge of 15%. But if you say, no sir, my total income is more than rupees 2 crores, less than 5 crores, and in that I have got short term capital gain of 111A, then the tax on that short term capital gain surcharge would be 15%. Surcharge would be 15%, and on the balance tax on the total income, tax on the balance total income would be at 25%. That is what the answer would be. Did you got this one? Fine students, and I will request to all of you to just share with your friends, tell them, because this would be literally would be very important sessions that we are going to do, because I understand that income tax somehow or the other students don't find it comfortable. So this is a very important attempt on our part to save your life from this subject by doing a quick revision through this wonderful charts which we have prepared for all of you. Okay. I think all the queries done. So can we conclude for the today's session? Again, I'm repeating, students, please possible take the printout, color printout, do the spiral binding. A3 would be the size. 28, please only take for 28. In between you can skip all these things, and then from the next class or so you can be there with us and we can start with our session with their notes as well. I'm closing the session then, students. See you then tomorrow. I think morning session is Om sir. He is doing a very fantastic job in ITSM. One of the very best person I've known, and easily I can say the best faculty for your EIS and SM. So he will have this morning session tomorrow, 7 o'clock to 9:30, or 7 to 9 o'clock, sorry, and then 9:30 or 9:40, between that time I'll start with income tax. Fine, students. See you then tomorrow. See you then. Thank you very much. Please revise, students, whatever homework that I'm giving it to you. Please keep on doing that, so that on a real-time basis you complete the entire syllabus with me. So that 2 hours of your investment you will complete with me the entire income tax. Please be just ensure to do whatever the inputs which I'm giving it to you. See you then, students. Take care. God bless to all of you. Thank you.